Hello, everyone. Good morning, good afternoon, and good evening to you, depending on whichever part of the world you are tuning in from. Well, I'm very excited to welcome you to yet another promising edition on the X Trend Speed Live as we take on the second half of the new week. But before we begin, let's quickly run through our daily routine by confirming that we are good to go this morning. So if you can see my screen and you can hear my voice loud and clear, please let me know in the comment section by typing hi. So I look forward to seeing your comment, please, while I try to load up my comment box. Thank you very much as you do so. All right. I can find the handful of comment right here. I really do appreciate this pumped up energy I can feel in the house right now. Bombcat 21, thank you very much. SCGSG 2188367, good morning. I see you 4469, Kokeak. I see you too as well. Nasd, thank you very much. Hey, Carrie, how are you doing today? Good morning. Ricey Rick, good morning to you. Glad to have you around with us this morning. 44469, thank you very much. Hey, Steamroller, good morning to you. It's been a while since I saw you. Trust you are doing very well. Glad to have you around with us this morning. Hello, Taibat. Good morning to you. Glad to have you around with us this morning. Bruja, how are you doing, Bruja? Good morning to you. Well, I would like to take this as a very positive confirmation that we are very much good to go this morning. So on this note, I welcome you all once again to yet another promising edition on the X Trend Speed Live. My own name is Sheriff Daramola, and for the next 1 hour, I'm going to be your host as we're going to be taking another journey into the financial landscape using simple and fundamental tools such as trend lines, key levels, and chart patterns to gain valuable insight into the historical price movement of the assets on our watch list for this week. Well, it has been quite a wonderful week for us all in this community. Remember, we have four major assets which we have been monitoring since the beginning of the week, and in fact, majority of them have done pretty well across board. And we are going to be taking some moment to go through these assets to see how the market has done and how we are going to be managing our existing positions while we also anticipate the New York session. Well, today promises to be a very insightful edition. As you all know, we're looking forward to the first Chairman's speech coming up much more later today for cues into what the next course of action will be. For those of you who are joining us for the first time, you're highly welcome on board, and I'm very excited to have you around with us this morning. You might be asking, what is this all about and why are you here with us in this community? Well, as technical traders, we gather here every day to come together as a community in anticipation of the New York session. We come here to engage in follow-ups, reviews of our current positions as well. It's usually kickstarts 10 a.m. UTC, 11 a.m. West African time. I recommend that you stay tuned in during this time so that you don't miss out on any of the insights and valuable ideas we will be deliberating on today. My aim is to equip you with the knowledge and skills necessary to make informed trading decisions independently. The more time you spend with us, the better you will become at comprehending our analytical approach and utilizing the information gathered here to enhance your own trading decisions and strategies. Once again, I extend a warm welcome to you all. So with that being said, here we will be diving right into the business, and as usual, the first thing we normally do is to check on the economic calendar. And for those of you who have been with us in this community, you know how we do it. You know how important this is, as checking the economic calendar gives us an insight into the fundamental factors. And of course, these fundamental factors often manifest on the chart in technical patterns and price movement. By monitoring the economic calendar, we can identify potential correlations between key economic releases and specific technical patterns on the chart, hereby giving us valuable information needed to position ourselves in such a way that we can capitalize on any potential move prior, during, and even after this economic event. So right here on the economic calendar, we usually focus on high impact events from the economies that affects the assets on our watch list. And considering the asset we have on our watch list for this week, we are going to be focusing on the United States and the United Kingdom economic docket. Now for today, Thursday, November 9th, we have a handful of impactful events we are looking forward to. In fact, I try to include the medium impact event so that it can give us a broader perspective into what majority in the market will be looking forward to. Now, the first one for today came in about 2 to 3 hours ago, and that is the Bank of England UPIL speech, which came about 2 hours ago. And of course, UPIL is the chief economist and executive director of monetary analysis and research of the Bank of England. Well, at the moment, I'm yet to have an highlight on what is said, but I can tell you that we had some insight into the United Kingdom economic docket as at yesterday. Remember, the Bank of England's governor, Andrew Baylis, had a speech yesterday, and one of the things he was saying is the possibility of more rate hike going into the end of the year. Then another thing that is a major cap as regards to the United Kingdom economy is as regards to the resilient the anticipation or the projection of an economic downturn by next year, which is not something good for the pound sterling. So we are going to be looking at how the market is reacting to the current fundamental factors surrounding the United Kingdom economy. Then in about an hour or two from now, we're looking forward to the initial jobless claims from the U.S. economic docket. And this is usually released by the U.S. Department of Labor. And in fact, it measures the number of people filing first-time claims for state unemployment insurance. Well, a larger than expected number here indicates weakness in the labor sector. So the previous data for the month of October came in at 217,000, and we have economics projecting 218,000 for the month of November, which is not a promising figure at all, as the higher the number, the weaker the economy is, which would dovetail to a bearish sentiment for the US dollar. Then later today, we have speeches from Bostic and Barkins, and finally that from the Fed Chairman Powell. Later today, I think in about 8 to 10 hours from now, he will be giving a speech. And one important thing about this speeches is how it influence market sentiment, as the speeches here gives us an insight into the monetary policy of the bank, the central bank's outlook on the economy, the potential policy shifts, and of course interest rate changes or decisions, hereby impacting our trading decisions as well. So these are the impactful events we will be looking forward to today. And in fact, as technical traders, we do know that the anticipation of this event has a tendency of influencing price action. Now, let's go into the chart and let's look at things from a technical standpoint. So the first asset on our watch list for today is going to be, as usual, the US All Sports. As you will see, I don't know why the US All Sports usually takes some time to load up. Okay, here we go. So on the US All Sports since the beginning of this week, remember we have been selling this asset, giving us a whooping of approximately 1,000 pips as we had multiple entries throughout the course of the week. Now, oil prices are struggling to recover significantly during the Asian session, marking the third consecutive day of defensive price movement. However, the lingering concerns about diminishing demand in the US and China, the world's top consumer of oil, of course, are exerting downward pressure on oil prices. Now, this economic factor lean towards a bearish outlook, indicating that the path of least resistance for crude oil prices is to the downside. However, in today's session, we are going to be looking at things from a technical standpoint to see if the market has a tendency of doing some rebound or retracement today, or will price action continue to the downside. Now, before we go into the details here, let's run through, and for the sake of those who are joining us for the first time, let's run through how we started the week and what led to the decisions we made. So at the beginning of the week, it was more of a consolidation phase, remember, which led to a buy position for us. Remember, we saw price action initially confined within the $81 level and the $80.68 area to emphasize the level of indecision at that particular point in time. And of course, you know how we do it in this community, especially when price action falls into such a range. We want to exercise patience and wait for either the breakout of the resistance line to give us an opportunity to buy, or the breakdown of the support line to give us an opportunity to sell. In fact, at the beginning of the week, it was more of buying this asset as we saw the breakout of the resistance line. And I made mention that for those of us who missed out on that opportunity, a buy limit at that entry zone will give us another opportunity to join. So we saw this happen. Price moved about 100 pips in our favor before the bearish momentum came in, taking us out of that position. Now, as we continue to monitor price action, remember we identified the support line here. We said price breaking down the support line will welcome selling opportunities, and since that moment we have been selling the US All Spot. And remember, we also had the privilege of adding more sell positions as we identified levels such as the $80 area. We also had it at the $78.80 level. We also had it at the $78.15 area, and in fact, during the live session yesterday, we looked out for more opportunities at the breakdown of the $76.80 area. So it was quite a tremendously profitable week for us all in this community on the US oil spot. And for those of us who took advantage of these opportunities, well done and kudos to you for being on standby to capitalize on that move. Now, with the way things are going right now, I'm already out of all the sell positions. As you all know how we do it in this community, we move our stop losses accordingly, secure the position, and if you see what has been going on here since the later part of the New York session, we begin to notice some buy pressure come in, taking us out of that position. And for those of you who are still in a sell position right now, I will advise and encourage you to secure all position or probably get out of this trade at this point in time, as we're beginning to notice some bullish traction gradually unfold on the chart. Now, with that being said, and with a well secured position, what is going to be our plans ahead of today's trading session? Are we going to continue buying are we going to continue selling the US All Spot, or are there chances that buyers could come in maybe to do some profit taking activities in the form of a retracement on the chart? Now, before we go into the details here, and for the sake of those who are joining us for the first time, I do want you to be on the same page with us. So we shall be scaling up into the higher time frame to see what we saw from an holistic standpoint that made us to make the decision we made during the beginning of this week. Okay, I think I'm having some network issues here. Okay, all right, I think it's right back on. All right, so here we are on the daily time frame. This was where we started our analysis for this week. Now, one of the things we saw here, which was a major factor on this current market structure, is that $80 area, which has been a level, or let me say a zone, which had played a major role in determining the direction of price action since the beginning of this year. And in fact, prior to the breakout of the structure in the month of August, we saw how that area around the 80 and the $85 area was serving as a strong selling niche, giving us an indication that this was a seller's territory. And finally, we had price broke out of the structure in the month of August. Price came up. It was serving as a demand zone. And during the course of the week, we saw price action break down the $80 mark one more time, bringing price back into the seller's territory. Now, going into today's trading session, how do we intend to capitalize on this? Well, yesterday, if you remember, I made mention that are we likely going to be seeing price do a retracement? You know that whenever price breaks down a key structure such as this, we expect price to come back, retest the structure to incite a downtrend scenario. Now, is this going to be the case today, or are we likely going to be seeing price drop further to the downside? I want to show you something on the 4 hours time frame before we scale down into a much more lower time frame. Now, on the 4 hours time frame, what we did here was to take into consideration the nature of price action throughout the month of October. And if you look at the structure closely, you will see that despite the impulsive bearish leg that pushed price into the $80 zone at the beginning of the month, we saw how that area around the $80 mark served as a demand zone for participants in this market, as we saw how sellers found it difficult to break through this area. You saw what happened here, we saw what happened here, and in fact, we saw what happened during the last week of the month of October, stroke the early days of this month, and finally, we had the breakdown of the $80 mark. Now, in addition to that demand zone is this descending trend line, which captured this market in the last couple of weeks, connecting the series of lower highs, emphasized the strength of the sellers, leading to the breakdown of that demand zone. Now that price action has broken down the demand zone at the $80 mark, we expect that some point in time price will come back to retest the structure, maybe in anticipation of a downtrend continuation, or probably break out the trend line to incite an uptrend move. Now, with the way things are going right now, in the last 1, 2, 3, 4, in the last 16 hours in this market, it's quite clear that the $75 area had become a barrier for sellers. As you will see, sellers have been finding it difficult to break through that level. Now, the question going into today's New York session is, will this become a platform that will incite a retracement back into the $80 mark? And if we look at this closely, this will be giving us about a minimum of 400 pips to catch here. So if this is going to be the case, then definitely we want to be looking out for reversal setups on the lower time frame that we will use to validate this and join the bullish momentum to the upside. And in fact, if the contrary happens and instead price breaks down the $75 mark, then we want to be getting ready to sell. Now, with the information we have gathered on the 4 hours and daily time frame, let's scale down into the 1 hour time frame, where we will be able to see how market participants have been reacting to the structure since the beginning of this week. Now, if we zoom into what has been going on in the last 4 days, you will see here that the first thing I did was to acknowledge the bearish momentum, and to do that, I connected the series of lower highs, giving me this beautiful descending trend line to work with. And you know how we use our descending trend line in this community. As long as price remains below the descending trend line, we want to be looking out for patterns and structures that support the idea of selling. And we are not going to be buying unless price breaks out and breaches the descending trend line. And if we zoom into what has been going on here in the last 16 hours, we begin to see something interesting gradually unfold on this chart. The first and first here is the lowest point price action has gotten to for this week is the $74.90 level. And since price tested this level, we have seen a situation here where price has been confined within the $75.85 level and of course the $74.90 area to emphasize the level of indecision going on in this particular market. And whenever we see an indecisive phase like this, you know how we treat it in our community here. We exercise patience and wait for either the breakdown for selling opportunities or the breakout for buying opportunities. Now, there is something interesting going on within this range, which I would like to share with you this moment. Now, if you look at this closely and considering the impulsive move that brought us into the structure, you will see here that price action is unable to break down the previous low, hereby giving us a higher low in that regard, and at the same time transitioning into what is gradually looking like a reversal pattern in the form of a double bottom structure. And of course, you know, when we start seeing price transition into a potential reversal pattern like this, the next thing we want to be doing is to mark out the neckline, which we will need to be broken to validate that reversal pattern. Now we have a neckline around the $75.85 level, and one interesting thing about this neckline is the fact that it also shares a confluence with that descending trend line we marked out earlier. Now, if price action breaks out of the neckline at the $75.85 level, price would have also broken out of that descending trend line, giving us a sign that the trend line may no longer have the capacity to continue to negate the bullish attempt. Now, a breakout of the neckline is all we need to capitalize on a reversal setup. So there are two ways to which we will be capitalizing on this reversal setup here. Now, for those of us who are profitable on the USOILSPOT so far this week, we can afford to leverage on some of the profit we had made so far to test waters around or above the $75.85 area. So having a buy stop order seems quite reasonable. Personally, I already have a buy position triggered, looking forward to price action continuing to the upside. And if price continues to climb up, breaking out of the $76.80 level, we look out to add more positions. We have another level here at the $77.40. We also have a $78.15 area. Now, mind you, all of these levels are areas where sellers could come in again to incite a downtrend move. So as soon as price action gets into all of these levels, ensure you move your stop losses accordingly. Secure the position while we wait and see how the market participant will be reacting to this level. So a breakout retest of the level will welcome more buy positions, but if selling pressure persists and buyers find it difficult to break out of this level, then we might be looking at selling opportunities. So this is how we are going to be capitalizing on buying opportunities for today. So price breaking out of the descending trend line, breaking out of the neckline at the $75.85 level welcomes buying opportunities in this market. Now, in as much as we looking out for buying opportunities, we cannot ignore the potentials of sellers. Now, before I go into what it will look like here before we can start considering selling, please note that you do want to be having your stop losses in place. Very, very important. So having your stop loss right below the previous low seems quite reasonable, which is between 65 to 75 pips thereabout as a stop loss on this current position. Now, for those of us who are joining for the first time, I would ask you to exercise patience and wait for a retest of structure before you jump into any buy position here. Now, with that being said, let's look at what it will look like here that will make us consider selling the USOILSPOT. Now, If you look at the structure closely since yesterday, it's more or less like a range. And in fact, the lowest point where price action has been so far for this week is the $74.90 area. So personally, I want to see price action breach the $74.90. That is, taking out all these buy positions here to give me a comfort to sell the US All Spot. So if you are profitable so far this week, if you be part of this profitable journey, you can just place a sell stop order below the $74.90 area. But if you are joining us for the first time, you want to wait for confirmations like a retest of structure before we jump into any sell position here. So it's a simple setup we have here. Our center of focus for today is basically between the $75.85 level and the $74.90 area, where depending on the direction of the breakout will give us a clue into where price is likely going for today. So let's mark these levels out on our chart and use it as a reference point to guide our independent trading decisions for today. If you have any questions, feel free to let me know in the comment section. So I will be taking the next 10 to 15 seconds off to see if there are any questions whatsoever before we move on to the next asset on our watch list. All right. So in the absence of no questions, I want to assume that we are all on the same page. And in that regard, let's move on to the next asset on our watch list. If you still have questions, feel free to drop them in the comment section below. I see your comments, Steamroller. If you have any time over, can you look at XAUUSD? Okay. I will try to see if I can do that before the end of the session. Let's see if we still have enough time to do that. Okay. All right. So let's move on to the next asset on our watch list. So the next asset on our watch list for today is the USTech100, and in fact, the market is very much consolidating at this point in time, as majority are looking forward to the Fed chairman's speech coming up later today. He has been talking since yesterday. Let's see what he's going to be saying today. And one key thing that was missing from what he said yesterday is that he didn't say anything about the monetary policy outlook of the Federal Reserve going forward, which is something majority in the market want to hear and know, because this will give us an insight into a potential rate hike or rate cuts in the nearest future. Now, maybe hopefully today it will talk about it and give us an insight into how we are going to be positioning ourselves for the next couple of weeks. However, let's run through the current market structure on the 1 hour time frame and what led to the decisions on the USTech100. Remember, we have been buying this asset since the beginning of this week. And the first thing we observed during the first 24 hours of this week was more of a consolidation phase, where price was confined within the 15,150 and the 15,085 area to emphasize the uncertainty that has gripped this market throughout that 2 days. Now, you know how we do it whenever we have this kind of range. We, of course, want to be looking out for either the breakout or the breakdown of that range to give us an opportunity to trade. Now, coupled with the range is this ascending trend line we spotted at the beginning of the week, and for the fact that price, since it broke above this ascending trend line, price remained above that structure, we kept on to a bullish bias. And in that regard, we had a buy stop order situated above the 15,150 to capitalize on the uptrend move. And since then, we bought here. We saw how price moved significantly well. It moved over 180 pips in our favor before price action fell into a consolidation phase. And for those of you who are part of the live session yesterday, I told us all that we want to be placing our stop losses just right below the 15,255 area, giving enough breathing space for price action to move around. And of course, we saw what happened here during the later part of the New York session, as we saw price action take us out of all our buy positions with a minimum of let's see, a minimum of about 100 pips thereabout, which is not bad to start the week with. And since the price took us out of that position, price had continued to stay within that range, giving us the privilege of not having any positions running at this point in time. And of course, you know how we do it whenever we have this kind of simple range. We want to exercise patience and wait for significant confirmations, such as the breakout or breakdown of that range, to give us an opportunity to either buy or sell. So at this point in time, we remain idle on the USTech 100 as we wait for confirmations to join any potential move. Now, before we emphasize and expatiate on this current structure, let's run through the daily time frame. Let's see what things are looking like on the higher time frame. Having an holistic perspective will play a major role in helping us position ourselves strategically ahead of the New York session. Now, on the daily time frame, the first thing we observed on the daily time frame is the fact that price action has been bullish since the beginning of this year. And in fact, we have an ascending trend line to buttress the strength of the buyers in this particular market. And not until a couple of weeks ago, we saw price break down the ascending trend line, though this did not come to us as a surprise, as we already anticipated it after observing the continued lower highs that gripped this market in the last 3 to 4 months. And of course, from a technical standpoint, when price breaks down a structure, that is this ascending trend line, we expect it to come back, retest structure to incite a downtrend move. And throughout the last couple of weeks, we have seen price gradually climb up. And to guide our trading decision for this week, we marked out our key level at the 15,300, an area which is known for strong selling pressure since the month of June. Now, price action is back into that structure, and since yesterday, we have been saying that we are at a crucial juncture, as depending on how price action reacts to this 15,300 will determine how we are going to be positioning ourselves for the next move. We said here that if selling pressure persists below the 15,300, then the breakdown of that ascending trend line the second time this year will welcome selling opportunities. However, if at any point in time price breaks out of the 15,300, then this will take out the sell positions there to incite an uptrend move. Now, to give us a clarity into what is really going on here, as you will see that in the last 24 to 36 hours, price action has been consolidating around the 15,300, further emphasizing the level of indecision there. Now, to have a better perspective into what is going on around that area, we will need to scale down to a much more lower time frame. And to do that, we went to as far as the 1 hour time frame, where we can see how participants have been reacting to the structure since the beginning of this week. So, since price tested that 15,325, you will see how it has fall into a range between that level and the 15,255 area. So we want to wait for either the breakout or the breakdown of that range to give us an opportunity to either buy or sell. Now, one thing here that we cannot ignore is this ascending trend line we spotted at the beginning of the week. And you know how we treat our ascending trend lines in this community. As long as price remains above the ascending trend line, we want to be looking out for market conditions that supports the idea of buying that asset. And in that regard, I want to see price break out of the 15,325 level for me to capitalize on that uptrend move. So having a buy stop order above that area makes quite a lot of sense, as you will see that even within this range, price had continued to find higher lows within the structure, hereby revealing how buyers are gradually gaining momentum behind the scenes. Now, there are two ways to which we can capitalize on this trading opportunity. Now, for those of us who are profitable, that is those of us who join the bullish momentum at the breakout of the 15,150, we have profit in our kitty at this point in time, so we can afford to place a buy stop order above the 15,325 area to join that uptrend move. And in fact, if it doesn't work out, we know that we are only risking some of the profits we made so far this week. However, if you are new with us, I will encourage you to exercise patience and wait for the breakout retest of structure before we jump into that position. And one thing here is the retest could still go to as far as this ascending trend line and the 15,300 before the uptrend continuation happens. So let's keep this in mind. We hold on to a bullish bias on this asset as long as price still remains above this ascending trend line. So we're looking forward to more buying opportunities above the 15,325 level. Now, in as much as we're looking out for buying opportunities, you know how we do it in this community. We all understand how fluid the financial environment is. It's a very volatile market, and we might be thinking of one particular direction and the market does the other side. And if it does, we also want to be on standby to capitalize on that move. So in as much as we're looking out for buying opportunities here, what are the conditions that we will see here that will make us to negate the idea of buying and consider selling? Now, one of the things we want to consider here is the continued selling pressure around the 15,325, which of course gripped this market in the last 2 days. Now, if this persists and buyers find it difficult to break out and retest this level, we are likely going to see price drop to the downside, and in fact a breakdown of both the key level at the 15,300 and that ascending trend line would be a beautiful opportunity to join a bearish move. Now, you want to wait for confirmations to happen, like a breakdown retest of structure, before jumping into any sell position here. So that is the only condition that will make us want to be selling, a breakdown of both the 15,300 and the ascending trend line we identify here should be welcoming selling opportunities for us. But I doubt if this will happen, as the momentum is looking as if price will want to continue to find new highs here. But if price drops and breaks down both the ascending trend line and the 15,300, of course, we do want to be getting ready to be part of the bearish move here. So these are my views on the USTech100 for today. If you have any questions or you feel you need me to do some further clarifications, feel free to let me know in the comment section. So I will be taking the next 10 to 15 seconds waiting for your comments or inquiries. And if you haven't, feel free to mark out these levels on your chart right now, as you will be needing them as a reference point to guide your independent trading decisions for today. All right, so in the absence of no questions, I want to assume that we are all on the same page. I see a comment here, Firaun. Good morning to you. Glad to have you around with us this morning. So with that being said, let's move on to the next asset. So the next asset on our watch list for today is the GBPUSD, the cable market, of course. Remember, we've been selling since the beginning of the week. And in fact, we also had the buy position initially before the bearish momentum came in this particular market. The sell position has been closed actually. If you had moved your stop losses accordingly, you must have been taken out with a modest price of profit as buy pressure begin to appear on the current market structure, especially during the later part of the New York session stroke the Asian session today. And of course, since the buy pressure began, we have been noting some level of uncertainty here as price action is currently confined within the 1.23 and the 1.22750 area in the last 20 to 22 hours now. While a subdued US dollar and a sluggish US Treasury bond yields are bolstering the pound sterling, a cautious risk tone is limiting the upside, especially with Powell's speech coming in later today as market participants are eagerly awaiting Powell's comments for hints about future monetary policies which will significantly impact the near-term USD price dynamics and provide momentum to the GBPUSD pair in the absence of relevant UK data. Now, with the way things are going on right now, okay, for the sake of those who are not part of our live session yesterday and earlier sessions, let's run through how the week started before we go into the details of what we are looking at today. So at the beginning of the week, we saw price fall into a range. It was between the 1.239 and the 1.23650 area, and of course following an impulsive move before it got into that structure, we were looking out for buying opportunities at the breakout of that resistance line, which actually happened, and we saw price moved about 35-40 pips in our favor before the bearish momentum came in, taking us out of that buy position to trigger our sell stop order, which was sitting just right below the 1.23650 area on Monday. Now, since that moment, we have been selling. Remember, we had sell positions at the breakdown of the 1.23, and during our live session yesterday, we talked about breaking down of the 1.22750 to add more sell position to our existing trade. We saw price break down the structure again, adding a couple of more pips to our existing sell position before the bullish momentum came in, and I do hope we moved our stop losses accordingly. And if you had done such, you must have been taken out with a modest size of profits, a minimum of 60 to 70 pips thereabout on the three positions we had there. Now, with all positions secured and currently we do not have any position running at this point in time, how do we intend to capitalize on the next move? Well, if you look at the structure closely, you will see that ever since the bullish momentum began, as soon as price tested the 1.22475 area during the earlier session of yesterday's trading session, we saw that price action has fell into a range right now between the 1.2300 area and the 1.22750 level. Now, this further emphasized the crucial nature of the structure as majority look forward to the Federal Reserve Chairman's speech coming up today. Now, for us to have a better insight into what the structure is looking like from an holistic perspective, I want us to quickly run through the 4 hours time frame to see what we saw here yesterday and in fact since the beginning of the week. Now, on the 4 hours time frame, what we did here was to take into consideration the nature of price action since the beginning of the month of October. And one major determinant factor here is that supply zone around the 1.2330 level and our week's key level at the 1.2300 area. Now, one thing you will notice here is that during the second half of the last month, we saw how this area had been a barrier for buyers. Every attempt by the buyers to break through the structure was met with strong resistance from the sellers. And not until at the beginning of this month that we saw the significant impulsive move breaking out of that structure to incite a bullish potential in this particular market. And from a technical standpoint, whenever price action breaks out of a structure like this, it's not only that structure, in fact, we also had the breakout of this trend line here. And when we see price break out of a structure like this, we expect that some point in time, price will come back, retest the structure to incite an uptrend move. Now look at what is going on here around the structure in the last 48 hours. Now we have the supply zone that was broken. We also have the ascending trend line that was broken as well. And as you will see, price has come back into that zone. And since it came back into that area, we have been noting some level of consolidation happen around this area, which further emphasize the level of indecision going on in this market. Now, the question going into today's trading session is, will price respect the ascending trend line one more time to incite an uptrend move, or are we going to be seeing price drop further to the downside? Now, there is an interesting setup I was able to identify on the 1 hour time frame, which I'm very eager to share with you this morning. Now, if you look at the 1 hour time frame critically, okay, let's wait for this chart to load up. All right, so if you look at the structure critically, you will see that price has been in a range for the last 48 hours. And in fact, considering the bearish impulsive move that started this week, remember we have a descending trend line, which currently appears to have been broken right now to the upside. And because of this, I want to start considering buying this asset. Now, we might likely see a breakout, retest of the trend line to incite an uptrend scenario. Now, in addition to that trend line is this interesting reversal pattern I was able to identify here. So if you take into consideration the impulsive move that brought us into this area, you will see that price action appear to gradually transition into what is looking like a head and shoulder pattern. And one thing about the head and shoulder patterns, which I usually look at to give me an insight into the potential of this reversal pattern becoming valid, is the nature of both of the shoulders. Now, if I look at the left shoulder here, I want the right shoulder to be a little bit higher than the left shoulder. Now, look at the left shoulder here. Price stopped around the 1.22650 level to climb to the upside. And if you compare it with the lowest point here, you will see that it's around the 1.22750. And as long as price remains higher, that is, the right shoulder remains higher than the left shoulder, I want to consider that buyers will likely take over and validate this reversal pattern. Now, the next thing we usually do when we notice a potential transition of price action into a reversal pattern is to identify the neckline, and this is where it becomes much more interesting. Now, if you look at the structure here, you'll see our key level at the 1.2300 area coincidentally shares a confluence with the neckline of that reversal pattern. So we have the head and shoulder pattern here, and we have the neckline around the 1.2300 area. So the breakout of the structure will be all we need to capitalize on that uptrend continuation. So let's see if the market will break out of that neckline to incite an uptrend situation here. And in fact, if price breaks out of the neckline, price will be back above the ascending trend line we spotted on the higher time frame to give us confidence of joining an uptrend move. So there are two ways to which we can capitalize on this one. For those of us who are already profitable, you can afford to leverage on some of the profit you had made so far this week by placing a buy stop order above the 1.23, so we can capitalize on that uptrend all the way to the upside. However, if you are new with us, I would encourage you to exercise patience and wait for the breakout to happen, retest of structure for confirmations before we jump into any position. And one thing I would like to state here is that a retest could drop to as far as the descending trend line before an uptrend continuation happens. So let's take this in mind, keep this in mind while we continue to monitor price action here. However, in as much as we're looking out for buying opportunities here, it's not all the time that the market always follows through with a technical expectation. There are times where you see the market does the opposite of what everyone in the market is thinking of. Now, if you look at the structure here, you will see that price is been within a range in the last 48 hours, that is between the 1.23 and the lowest point here at the 1.22 475. And of course, I want to see price take out the lowest point here before I can start considering selling. So a breakdown of the 1.22475, maybe a retest of structure, will be beautiful opportunities to join a decline here. So it's a simple setup we have on the GBPUSD, as we have our center of focus between the 1.23 and the 1.22475, where depending on the direction of the breakout will give us an insight into where price is likely going for today. So let's remain patient, let's exercise patience here and wait for the signal to come. And I would encourage you to mark out those levels on your chart, as you will be needing them as a reference point to guide your independent trading decisions for today. And if you have any questions, feel free to let me know in the comment section. So as usual, I will be taking the next 10 to 15 seconds off to see if there are any questions, after which we'll move on to the last asset on our watch list for today. All right. So in the absence of no questions, I want to assume that we are all on the same page. And in that regard, let's move on to the last asset on our watch list for today. So the last asset on our watch list for today is my favorite. That's the XAUUSD, popularly known as the gold spot. And since the beginning of the week, we have been selling this asset in this particular market. Now, let's run through how the market started this week. In fact, it was more of a bearish momentum at the beginning of the week. But before the bearish momentum began, price action initially fell into a range that was between the 1,993 level and the $1,987.50 area, before we finally saw the breakdown of both the ascending trend line and the support line of that range. Price came back to do multiple retests of the structure, and since that moment we have been selling this asset. We had our first sell position at the breakdown of the 1,982, as you will see here. Then we added multiple entries, as we had levels such as the 1,971. We also added one more at the breakdown of the $1,964.25 level. And during our live session yesterday, we talked about selling again below the $1,957 area to run that momentum all the way to the downside. And for those of us who were part of this profitable journey, well done to you, as you will currently be having over 500 pips in profit from these multiple entries we were able to take advantage of. Now, at this point in time, for those of us who still have a sell position running at this juncture, I would encourage you to move your stop losses accordingly. Secure the current position, and from the look of things, I will be suggesting that anywhere around the $1,954.60 level and the 1,952 area seems most appropriate to secure this current sell positions while we look out for new trading opportunities. Now, with a well secured position here, what is going to be our next line of action for today? What are our plans? Are we going to continue selling, or are there chances that buyers will come in anytime soon? Now, having gained over 400 pips from the multiple entries we have, the gold price continues to hover near a multi-week low as seen in yesterday's trading session, just right around the $1,947.50 area, to give us an insight into buyers trying to gain some momentum from this particular juncture. The ongoing decline in the US bond yields is putting pressure on the US dollar. seemingly providing some support to gold with buy pressure noted at the structure, especially during the Asian session. In this regard, and given the anticipation surrounding the first chairman's speech coming up today, it is crucial that we secure the current sell position and wait to see if there will likely going to be a rebound happen today. Now, how do we intend to capitalize on any potential trading opportunities today? Well, everything is right here on the 1 hour time frame. So the first thing I'll do here is to acknowledge the bearish momentum that started last week Friday, and to do this we connected a series of lower highs which gave us this bearish trend lines we have here. In fact, we have a couple of these trend lines here which emphasize the strength of the sellers. So we have the first one here, and of course we have the second one right here. And you know how we treat our descending trend lines in this community. As long as price remains below those descending trend lines, we shall feel comfortable in our sell position. And the only condition that will make us consider buying is for price to break out of this trend line. Now, in addition to this trend line is the range here between the 1953 and the 1947.50, where price action has been caught since the later part of the New York session. Now, for me to add more sell position to my existing trade, I want to see price break down the 1947.50, which happens to be the lowest point price action has been for this week, which has been triggered right now. And for those of us who took advantage of this, let's see how it's going to play out. Now, remember how we usually take advantage of trading opportunities in this community, depending on where you are coming from. For those of us who are profitable so far, that is, you joined our sell position since the beginning of the week. Because of the fact that you are profitable, you can afford to leverage on some of the profit you have made so far this week to test waters below the $1947.50 level to see if it will work. And if it doesn't work, we know that we are only risking some of the profit we made. However, if you are new with us and this is your first time with us here, I would suggest that you exercise patience, wait for the breakdown, retest for confirmations before you jump into any sell position here. And remember, you want to have your stop losses in place. Stop loss of about 40-50 pips thereabout seems most reasonable at this point in time. Now, with that being said here, we cannot ignore the potentials that buyers can come in, especially when the US Treasury bond is dropping, which of course would reflect on a downtrend situation for the US dollar. Secondly, the geopolitical tensions in the Middle East, where this kind of situation usually incites market participants moving their capitals from currency assets into safe haven assets such as the gold. And because of these expectations here, I will not ignore the potentials that buyers can still take over this market. And if buyers do, what is it that we want to see here that will make us feel comfortable buying this asset? Well, the first thing we talked about here was this range here between the $1953.50 level and the $1947.50 area, which has revealed the level of indecision going on in this market. And of course, one thing we are going to be looking out for to buy is for price to take out all the sell positions here, break out of the 1953. And in fact, you see here the breakout of the $1953.50 level will also have taken out that bearish trend line. So price breaking out of that trend line will be a beautiful signal that we are about to witness a momentum shift. Now, technically, you want to see retest of structure for confirmations before you jump into any positions. But if you are profitable, you can afford to place a buy stop order above that structure to capitalize on that uptrend move. So this is how we are going to be managing our position on the XAUUSD for today. So it's a simple setup here. Our center of focus is basically between the 1953 and the $1947.50 level, where depending on the direction of those breakouts will give us clues into where price is likely going to be going for today's trading session. So at this juncture, this is where we shall be rounding up for today. I'm very sorry, Steamroller, I wouldn't be able to take on the XAUUSD. So let's see what happens tomorrow, if it's a possibility. I would let you know. And if I see you in the comment section, I will try most as possible to include it into tomorrow. So if you have any questions, anyone, please let me know in the comment section as we round off for today's trading session. All right, so in the absence of no questions, I want to assume that we are all on the same page. And in that regard, let's round up for today's trading session. It has been a wonderful moment with you guys today. I really appreciate every single moment I had with you as we took on 4 major assets on our watch list for this week, which includes the USOILSPOT, the GBPUSD, USTech100, and of course the XAUUSD. And we were able to identify simple trading setup using simple parameters such as trend lines, key levels, and chart patterns to position ourselves strategically ahead of today's trading session. And please remember that we look forward to the first chairman speech coming up later today, and in fact the anticipation of this event has a tendency of influencing the market sentiment, which could bring some volatility too as well. So let's ensure that all existing positions should be duly protected. Move your stop losses accordingly, lock in some profit, and as we get prepared for today's New York session, let's ensure that we do not allow impulsive decisions to take over our trading repertoire. We want to ensure that all current market conditions are duly mature before we jump into any positions. For those of us who joined for the first time, I do hope you are able to gain 1 or 2 things from what we discussed here today. And I do hope to see more of you same time tomorrow, as the more time you spend with us, the better you'll become in understanding our analytical approach in this community, and eventually be able to use the information you gather here to make your own independent trading decisions. So once again, I wish us all the best of luck today, and I look forward to seeing you all same time tomorrow, which 10 a.m. UTC, 11 a.m. West African time, as we come here again to review how well these assets have been doing, and of course prepare for another interesting session for tomorrow, being the last trading day of the week, and it promises to be an exciting one too as well. So on this note, I wish us all the best of luck and hoping to see you same time tomorrow, and do have a wonderful evening. Bye bye.